All right, Jim, nice gain here, even though we're following earnings from Goldman Sachs and United Health.
Yeah, there's split decisions here. Goldman I loved because the return on equity is 15.4, which is the best. It's a great measure of how they're doing. Fixed income, we wanted it to be up. It was up. Some tremendous trading revenues. But in the stock opened up, it was up 3 in the morning market. Now going through the call, people aren't as excited. I think it's plain wrong. They bought a stock a lot in the 260s. And what we're seeing is what I predicted would happen last week, which is JPMorgan was traded up to 115, then goes to 109, is now trading up at 111. That's fair, because JPMorgan's quarter was the best quarter in history. Goldman's quarter was not the best quarter in history. But what I like is that Goldman's quarter could be getting better and better and better, provided there was more volatility. I think that the bottom line on Goldman is people are saying, hey, wait a second. There was great volatility. We know that from what happened in February. And is this all you got? I think that what people have to settle into the idea is that the market is going to present more trading opportunities. We all see it every single day, and that's Goldman's bailiwick. The return on equity, I think, is going to go up from here. If you sell Goldman, which is an ActionAlertsPlus.com name, I'll buy it.
And we're going to talk more about Goldman on our Action Alerts Plus call after this. Meanwhile, Jim, Dow's up 240 points. President Trump tweeting about lower taxes. I guess that's better than Amazon and Syria.
Right. I mean, look, I think that the president is getting... Look, he's been off the reservation in a lot of his tweets, and they've been disturbing. They've been disturbing because he's the president, and the office is an office that must be respected. And I think that he shouldn't be wasting time with Amazon. The tweets that he put out today about taxes, I thought were excellent. That's what we want, not petty fights, because he can really raise his stature if he were going to cut out the kind of belligerence and ignore the belligerence. Like Jeff Bezos has been ignoring all these different ride posts of the president. He needs to be above the fray, not in the fray. And when he's above the fray, like talking about how good the tax code is, I think people say, hey, you know what? It has been pretty good. So my lesson to President Trump is get out of the weeds, get above the weeds. You're the president of the United States. You can focus on China, absolutely. The trade deficit number with China, to me, was something I would have focused on this morning. It is way too big. They're taking way too much business away from our people. But I did like the positive message. And the last thing I will say about it is being positive is something that Winston Churchill taught us to be. Being an optimist is something. And my career, other than Gallipoli, never go against Churchill.
Good advice. And I think we kind of needed that reminder of tax cuts. It seems like investors have forgotten about that.
Yes, and I felt that was very potent comment. And I like when the president talks about positive change. I don't like it when he slags people who are beneath him or not need, I should say beneath him, but he disagrees with someone. You know what? Speak softly, carry a big stick. You don't have to be out there. We've got all these great companies that are doing terrific things because of the tax code. Now, J&J, for instance, reported a number. It had some hair on it. A lot of it was boosted by currency. But they did say the tax code is going to allow them to do $30 billion in more research and development over the next few years. I wish that he had advisors. I mean, his advisors are just not strong. I wish he had advisors who would say, here's a good thing to say, Mr. President. Here's something that's important. Or I wish they would say, you know, Boeing is taking share from Airbus. This would be a good thing to say. The negative tweets are disabling. The negative tweets make you feel that perhaps we're not doing as well. Someone in his PR department should be saying, wow, you know what, we've got some really good things from some of these companies. You might want to mention them rather than just be anecdotal and one-off about it, which is what he's doing.
All right, so we'll keep watching his Twitter account every morning.
Well, you have to, and it's so often disappointing because he's not an optimist enough. And he's got things that he says that are positive, but then when he goes low, it makes you very non-Churchillian. He is not Churchill, but you can still learn from Churchill.
That comparison cracks me up.
He's not. You know, he's more Nixon at times.
Oh,
it's
God.
painful because our companies are so great. Let's salute them. Let's just say great things. They've made so much money for people, rather than say the market's up because I've done it. This is one of those things that Bob Rubin, when he worked at Goldman, one time I did a report for him. He was very powerful at Goldman, and there was a meeting of about 300 people, and he said, one thing I want to point out is Jim Cramer did a remarkable report. It was really terrific, and great. So I went up to him after. I said, you didn't have to mention that, Mr. Rubin. And he goes, how much did it cost me to mention you? And I said, nothing. And he goes, credit is something you give to people. It is not something you take from people. Again, another learning lesson for the president.
And it probably motivated you even further.
I felt great about Goldman. I still do. I think Goldman's quarter was good. But I'm talking about a way to be able to handle earnings season, which doesn't really mean that much to the president.
Let's talk about Domino's Pizza. Oppenheimer raising their price target.
The key thing here, and the reason I mention this is because I am a big believer that when a CEO retires who's been fabulous, look out. Now, it didn't work for Darius Adamczyk, which we own for Honeywell for Action Alerts, because he's doing the right thing after Dave Cote. But, it's not an après-moi le déluge, a king of France. But Patty Doyle's been so terrific that it would be a hard act to beat. But you know what? They've got some irons in the fire that are pretty good, and they've got a balance sheet that allows a lot of optionality. They also are taking share from Pizza Hut and taking share from Papa John. So I'm acutely conscious and interested in the next 100 points of Domino's.
And you've long said this is sort of a tech company that sells pizza.
They had the new tech, the GPS, where you're on the beach and they've got your GPS, and they're also not. They don't get lost anymore. Like, one of the things that's happened is you go out there and you wave at the guy. I happen to love Domino's. It's here. Well, now it's in his GPS, so he goes right to you. So it's a little I would say it's like Uber. It's also going to be the best in self-driving because they're a pioneer of that. Obviously, they pioneered ordering on your phone, ordering on Twitter, ordering on Facebook. They're way ahead of everybody else, and that's Patty Doyle. But let's see what the next guy does.
Frequent guest on Mad Money.
The most probably ever, Manny Chirico, I remember. And one of the things I'm trying to do is get the new CEO of Chipotle on, because I'm starting to hear good things there, and that would be remarkable.
Jim, let's shift to Newell Brands. You talked about it last night on Mad Money.
I mean, look, Bonnie Herzog upgraded from Wells, and my problem is that we got to wait to see what happens this quarter. There were some people really upset with the piece and said that I made a lot of mistakes, and I would say pound sand.
But Jim, I mean, to your point, I mean, they sell things to Toys R Us. That's not good.
Well, I mean, one of the things that we learned is that Dick's kept hurting United. It kept hurting Under Armour. You kept thinking it was going to be done. It wasn't done. It wasn't done. It wasn't done. Mike Polk came on Mad Money and said many good things, and I have to protect my franchise. Who are my franchise? My viewers. If you hurt my viewers, that does not reflect well on you. And I can sit back and say, well, you know what? I'm really part of that ilk, which is the CEOs. I've been around for a long time. These are my buddies. How do I start the show every night? It's not about friends. It's about money. And if you want to lose money, we sold some Newell at double the price that it is. It certainly was unlucky, but a lot of it was, I think, destroyed by, like, you pick a fight with Office Depot about Sharpies. You don't really recognize the hazards of some of the companies you sell into. You bought a lot of stuff, and maybe Martin Franklin gave you some assets that you didn't like, but you sure didn't say that on air. So if investors and viewers get hurt, they're going to it's not going to be easy for them. As it's been difficult for me, I strain my relationship with Brent Saunders on Allergan, my relationship with Apache, because I don't really have relationships. I have my kids, my wife, my family, my friends, but not CEOs.
Show's been on for what, 13 years? That's
incredible.
Like,
are there CEOs that I've done charity work with? Yes. And that does take it to a different level. But I am going to compromise my view when it comes to children's hospitals. I'm going to compromise my view when it comes to 9/11 memorials. I'm going to compromise my view when it comes to a CEO who says that perhaps it's time that we did more for Holocaust, for getting the word out and keeping anti-Semitism from growing. I do these things because I do have a conscience. But if we're just talking about missing a quarter and saying it's going to be good, I got a conscience. My conscience is for my viewers. There have been 3 different times that Newell screwed up. In baseball, that's called 3 times and you're out.
All right, well put. Meanwhile, Jim, who do you have on Mad Money tonight?
Matthew Boss. Now, he's an analyst. He runs the best retail conference. Consumer spending is at the heart of what we're talking about. Brick and mortars at the heart of what we're talking about. Chinese imports, the heart of what we're talking about. Dollar stores, upgraded, heart of what we're talking about. And I need someone who is the hardest worker. I believe in the segment, and I don't have analysts on. I just don't do that, except for Matthew Boss once a year.
All right, we'll be watching tonight, 6 p.m. Eastern on CNBC. Jim and I are going to continue talking about stocks. Join us on actionalertsplus.com.